In terms of results for 2011, we ended the year at December 31st, 2011. You've seen the financials, about $44 million in total assets. And at the time, only the Horsham branch was open. We had not yet expanded into New Jersey. We had losses in 2011. Some of the losses were, again, the recap took place April 15th. We had a number of expenses related to the recapitalization. We had some additional, about $500,000 of write-downs on the legacy loan portfolio as credit deterioration occurred throughout the year. And that resulted in a loss for 2011, not unexpected. As we expand this year, our branch network, we expect to have losses again in 2012, but turn that around in 2013 and be profitable. One of the reasons we were at $44 million in total assets at year end was the opening of our New Jersey branches were delayed longer than we had anticipated. There are a couple reasons. One, I mentioned earlier that the bank had a needs improvement rating for CRA, which is Community Reinvestment Act, and as part of that rating, the regulators prohibit expansion of branches. So what we had to do was work to satisfy that rating and improve it to a satisfactory rating. And as part of that, what we did was in the fourth quarter of 2011 was go out and originate and purchase loans, some newly originated 1-to-4 family loans and some small business commercial loans here in our assessment area. And our assessment area is Montgomery County and a little bit of Lower Bucks County. So we purchased and originated approximately $9.5 million of loans in our assessment area, as well as did some other initiatives that the regulators came in, reviewed what we had done, and have subsequently upgraded our rating from needs improvement to satisfactory. So that's a huge win. So we can now branch without having the legacy issue of the CRA rating in front of us. It's now behind us. So that was very important. And also the bank again was under it still is to this day under a consent order. And the consent order, if you go back, relates primarily to the low level of capital that the bank had prior to the recap. 90% of the issues related to the consent order were capital related. We're just about done with all of the requirements to get that lifted. In fact, the final piece of that puzzle was a revised 3-year strategic plan, which we've been working with the regulators on, and on May 11th, so it's only a couple weeks ago, they actually approved our 3-year strategic plan, and now they are in the final process of getting the consent order lifted. So we expect the consent order to be lifted within weeks. So those are two major regulatory obstacles that one's behind us already and one is about to be behind us. And with the consent order being lifted and the business plan being approved, there's a couple things that happen. One is our FDIC insurance premium goes down, so because we're no longer considered a troubled bank. So where the FDIC insurance premium was 23 basis points, now drops to 9 basis points. So if you think about, if you have $100 million of deposits, under the old formula, our FDIC insurance premium would be $230,000 per year. Now it'll drop down to an annualized premium of $90,000 per year. So that's pretty significant. We also intend to become an approved lender with the Small Business Administration. Couldn't do that with a consent order in place. Now we can. Our business plan was approved, so now we can enter into a residential mortgage line of business, which we couldn't do before, but now we're in the process of implementing that. So there's a lot of new business initiatives and other cost savings that will result as the consent order is lifted in the near term. In terms of, let's talk about some of the initiatives and accomplishments that have occurred just in the last few months and since our last shareholders meeting, which was last July. We already discussed the CRA issue, which is the Community Reinvestment Act. We now have 2 assessment areas. Our assessment area for the Horsham branch is Montgomery County and Lower Bucks, and our assessment area for our new Middletown, New Jersey branch is all of Monmouth County. So we are focusing in on originating loans in, obviously, this assessment area of Montgomery and in Monmouth County. Our Middletown, New Jersey branch opened up on March 14th. We had the grand opening on May 5th, and just in that 2.5 month period, deposits in that branch have grown to $74 million. We had, it's a combination of, we had the grand opening. In conjunction with the grand opening, we had some rate promotions for money market and a 1-year CD. We had some of our shareholder base from New Jersey starting opening accounts. Some of our customers that we've had for years are opening accounts. So in aggregate, that branch in just 10 weeks has grown to $74 million, which is significant. Horsham branch has also grown over the last number of weeks as we implemented we had in conjunction with the rate promo out there, we had the rate promo here. So in total, our deposit base is now $102 million. Now, you keep in mind, at year end, it was around $30 million. Now we're at $102 million, so we're on our way to grow. And total assets for the bank are about $116 million. So the bank has never seen this type of, from since inception, has never grown to any numbers like this. And as we grow, think about we can accelerate earnings because our expense base was staying about the same, but our net interest income is going to grow. So even if the deposits that we're collecting and the loans and investments that we're buying, the net spread on that is probably today around 2.5% or so, 3% with some of the loans we're putting on. So at $100 million, we're earning almost $3 million of net interest income, whereas just at year end, we're earning $1.2 million on a base of asset base of about $44 million. So you see our net interest income is growing, but our expense base will stay about level. We'll kind of level off, and we'll start to see the economies of scale really take place. We're also, I mentioned we have a couple new initiatives. One is that we're excited about is implementing a residential mortgage department, and with that approval, with the business plan approval from the regulators on May 11th, they approved a residential mortgage department. So we really even haven't started originating loans, but we already have a pretty good pipeline. We have approximately 6 to 7 million, and we're probably over that already. We're probably more like 8 million in the pipeline, which means that's income of approximately 100 to 120 million to the bank. And these are loans that are expected to close in June and July. And we're really just starting. So up until 2 weeks ago, we weren't able to hire originators. We couldn't bring anybody on, but now we're starting to. We have 2 originators on staff now, and going forward by year end, we hope to have 8 to 10 originators on staff. And these are people who are fully commissioned residential mortgage loan officers. We hope to have them covering out here in Montgomery County as well as in New Jersey. We expect, our expectations is that sometime in early 2013, we're going to get to a level where we have annualized residential mortgage originations of about $100 million a year. And then once we get to that level, so that's about $8 million a month of mortgage originations. Once we get to that level, that'll generate, on a net basis, about $600,000 to $700,000 of pre-tax income. So that's after all the expenses for that unit are paid, all the commissions are paid out, to the bottom line to the bank should be about $600,000 to $700,000 of pre-tax income. So that's pretty significant. And we're lending on what's called a correspondent basis. So we're not taking any balance sheet risk. All of our loans will be sold into the secondary market. So right now we have about 6 wholesale lenders that we've signed up with. And what we do is we originate the loan, and we place it with one of the lenders. The lender actually underwrites the loan and makes the credit decision. Then they package it, close it, package it, sell it, and we earn a premium. So there's no credit risk for the bank. All the loans are being sold, and we're earning a premium. Someday, maybe we'll delve into that business a little further, but for at least the near future, we'll just stick to lending on a correspondent basis, earning the fee income, and not taking any balance sheet risk.